Hey guys, it's Simon with ToughTrader.com. Wanted to do a quick trade review here. Um, this is primarily for members in the room. If you're not a regular, some of this stuff might be lost on you. But I wanted to cover the key trade plan for today: what went right, what went wrong, and how or what I would change, if anything, for tomorrow, or how I could improve my performance from today to tomorrow. So let me tell you, first of all, coming in. I want to kind of give a picture. And before I get started, I always forget this, even though I have it right in front of my screen. Past performance is not indicative of future results. This is for educational purposes only. I'm sharing my trade plan with y'all in hopes it'll make you a better trader. But it's important. Learn how I trade. Take the pieces that you like, make them your own, right? But don't just blindly follow me, right? Everyone has different risk profiles. Make sure that your risk matches both your personality and your financial ability to bear risk. You can lose all your money trading futures. So it's important to understand what you're willing to risk and how you're going to risk it, right? So number one, let's jump in on the day. So what I want to start out looking at is at the profile itself. Okay, so most days, if we take just what I look at in the most basic way, not even in looking at the range, I generally expect that if we open up above prior day's value, as we did today, that on that first test into that 2721 area, all the way down, and then particularly into these volume points of control, the TPO and the volume point of control between 1675 and 1475. I expect responsive buyers in those areas. 21 might be aggressive, but certainly at 16 and 14. What? So the question is, well, why would I expect that? Well, normally, if you look at how just in a general way of what I would expect the market to do on this day, if we opened up above value, I would expect something between here and here in a very broad sense to get a responsive buy, right? So these are half-hour bars, and you can see we push in and we get a response back up. We don't break till late in the day. You can see here when we open up underneath in this area right here, that when we push up into that area, you can see we open up and we push into this, what the blue area is called value area, right? And then you have the points of control. And you can see as we push up into those points of control, we reject. And if you did a study of multiple days, guys, you'd see that it's just pretty rare to get run over like we did today. So what we ended up having, if you look, we actually opened up at prior day's settle price, and we ran all the way through the range in the first half hour, right? Pushed right through 2721, which is fine. That was just the top of value. It wasn't strong it wasn't strong support. But then we came right into 1416. And I would normally, if you said, hey, we get to that 1416 and we're not in a bear market, and you asked me, Simon, that happens 100 times. How many times would you bet that we were going to reverse out of that location, given a signal? And I'll tell you right now, I'd bet 100 out of 100. If it's a bull market, meaning we're not in those brief periods when we're just getting ripped apart, I would bet 100 out of 100 times I'm going to get a response out of there. I'd end up with about a 70 to 80% win rate, and I'd be a very happy camper, and I'd manage my losses the rest of the time. The win rate may even be higher than that if you have a smaller win. Why is that important? That's important because today, when we came into this area, yes, we got we did not get run over at the 2721. We got the 2716 to 2714 area correct. But on that first trade, I tried to push. My synopsis was that we were going to come down, and then we were going to push all the way back up to the top of that range. That was my synopsis. We had a strong close yesterday. NQ was leading. What got in the way? This is what we actually ended up with. I want to show you all this using the anomaly. So again, if you're not in my room on a regular basis, this will look like voodoo, but it really does make sense, I assure you. So this is let me not get lost here. We are on the 24th. We need to get to the 25th. No, we're on the 24th. Here's 9 a.m. Okay, here we go. 9 a.m. Here's the initial push down. This is the 14 to 16 area. You can see it's already marked out in orange right there. This is the area I wanted long. So the white stars indicate in the proper area where I want to get long. So what were the characteristics? I want to explain this trade because I ended up, while I did get a scale on it, I ended up taking out ended up taking the trade out at a break even on this trade, or a slight loss. I forget how it ended up working out, but it might have actually even been a slight loss if I do the math correctly, because I scaled at my first 2 points. I never got the second scale. It went +3. It never went +4. And I really thought we were going to push back up to 27.30 and higher at the end of the day. And here's where the key distinction was. So I got long on this bar right here when this closed. My stop was 1 point below this bar right here. So realize what we have. This shifts us from guessing what the market's going to do to, I know, A, I understand how my algorithm works. B, I understand I was between the second and third standard deviation, that my likely target was back to VWAP, right? So this is a trade that I run again and again and again. And I know exactly where my risk needs to be from my entry, right? So they come all the way down. They almost took me out. This came within a tick of my 1 point stop. It survives, comes all the way back up and pushes to 27.19, which gave me my 27.18 actually gave me my 2 points. And then it pushes all the way up to 27.20, but it doesn't push to 22, which is what I think I needed, 21 or 22 to get my 4 points. I didn't get it. Okay. We then come back around. I want to show you later this morning. We come back around over here, and we were retesting the back of that 14.17 area. This is not uncommon on most days to come in and slightly break the low and then punch back in and then go back up. So why was today different? I took this long right here at 27.15 roughly. Okay, so why was today different? Well, number one, we had the press conference concerning the United States pulling out of the North Korean peace and South Korean peace talks, right? Or canceling them. And then President Trump was speaking at 10:30 Central Time, 11:30 Eastern. Okay, so that kind of put a weight over the market, and the trade simply didn't work. So I want to be clear. This trade worked had I simply taken my 2 points, moved my stop to break even, and attempted to get the 4 points. That's an in-out profitable trade, and that's how I would run it 90% of the time. I simply was going for, and I made it clear in the room, almost everyone in the room got a profit in this except me, that I was going for the swing on here. So let's pause for a second. When you go for the swing, I want to be clear on this. When you go for a swing on a trade and it doesn't work out, I want to be really clear, and it doesn't work out, you cannot go back and cry about it later, right? You either go, I'm taking the swing and I'm willing to risk the P&L that I already have in my pocket, or you go, I'm not willing to lose or give back any money that I've made on this trade, and my worst stop on this is going to be either break even, net break even, or my original stop. But when you decide that while you're up in the trade, right, while you're actually up and profitable on the trade, and you say, this is what I'm going to do, you do damage to yourself and your psyche and to your trading program by going back in and getting pissed off or upset that it came all the way back and stopped you, because what you were saying was, I'm willing to sacrifice this P&L that I already have in the hand in exchange for getting up here to 27.30. And occasionally you have to take a shot. I took a shot. Now, when we move over to the right, so I want to show you this. Notice that, let's see, I got stopped here on this attempted trap back in. I took it again, got stopped. That was a 4 point stop for me on the day, right? And I paused there. So I want to be really clear. I paused. I did not take my next trade in series. Okay. Why did I pause there? Even though we were in a support level based on the chart, I paused because at this point it's 9:59. We're half an hour away from the president speaking. And I'm figuring, my thought process said, well, my algo is firing, and what normally would be a very, very high odds trade is getting run over, right? And we're probably going to be pressed into Trump's speech. In exchange for thinking through my process, I ended up not taking. So I get triggered on a long. If you look, my next long triggered in 2 places. One triggered here, which would have been profitable. I skipped that trade. I skipped this trade, which would have stopped right here. And then this trade, the stars are what triggered me in. And what you'll see and what I missed in my analysis, see this right here? The algo is highlighting, this is the strongest negative delta of the morning of this entire push down, and I missed it. Even though it's highlighted in hot pink, you'd think I'd have an easy time getting it. I missed it. That was the highest negative delta. Okay, we then had delta divergences we pushed below, and in addition to additional buy signals that I get in here. And then you'll see once we were able to close above this bar right here that's highlighted in hot pink, it was over. They were gone. A ton of volume got put in here at this 2709, and I missed the long trade. That is my bread and butter right there. And I just let the news interfere with my flow. Now, something very important happened here, guys, and it's really, and for the guys that I coach one-on-one, this comes up often, and it kills your trading. I missed this trade, right? Trump's going to speak in 30 minutes, and we've already ripped off of a buy signal. We've already ripped from 2705 all the way back to 2714. That is frustrating. If you're a day trader and you had a profitable trade that you let turn into a losing trade early on, but that's all right. That's cool. Or even a break-even trade. You're still cool, right? Then you take a next trade on a normal signal and it stops you. That costs you a couple of points, 3.5, 4 points, somewhere in there. Okay, that's a little frustrating, right? But now you go, I'm going to do the prudent thing, right? And I'm not going to take a loss. I'm not going to add another trade in front of the news. I'm going to wait. And the market rips away from you like this. What a lot of traders will turn around and do is go, I'm going to short now because I've missed my opportunity. And I want to show you something. Look how the rest of this day unfolds. And these are small bars, right? No matter what you did to try to find a short here, we simply were grinding up right into the close all day long. The short became very, very difficult. Now, if you can keep your cool about you and just simply go, I missed the trade. I'm not going to turn around and fight the market back up and accept that the cards, most days they fall our way. This time they didn't fall our way. You get out of the day with either a small loss or, as most of the people in the room were, most people were profitable, right? And the best trade I made today was simply refusing to fight the upside move and accepting that I missed the move off the low. It did exactly what I thought it was going to do, and we pushed in the Asian session. We pushed all the way up into 27.37, which was a full 30 points off the low and where I expected the market to go the majority of the day. So if you look at for my own personal trading out of the last 7 days, I now have 5 up and 2 down, and the 2 down are pretty moderate losses. The 5 up are pretty good P&L days, better than the 1-to-1 RR. And so my point behind all this and going on here is number one, what we're playing for is the odds of what the market does the majority of the time. Again, I'm going to go back to the profile. When we come into this profile and we come into these major areas in the profile, I expect responses back up. Often I expect big responses back up. I am happy to take my shot. And if the market stops me, my risk is appropriate relative to my reward that I get out of trading, right? And if yours isn't, right? If you're trading trade by trade and every trade has to be profitable for you and you're trying to be perfect, A, it's not doable, right? And B, it's not the way to build a large trading account. The way to build a large trading account is in a structured way, increase trade size over time and hitting your highest odds trades again and again and again. And then when you recognize the environment, you recognize the setup, a stretch and a key location that can give you a big counter rotation back up, that's where you take your shot. And if it doesn't work out, you just kind of shrug your shoulders and move on to the next trade. Anyways, I've gone on longer than I wanted to go on. This has been a long day. If you would like to meet us in the room, join us. Send me an email to tradertough@gmail.com. You're welcome to have a 5-day pass. The rates are going up for the room at the end of the month. We're going from $95 a month to $200 a month. And you're welcome to have a 5-day pass and see what it's all about. But what we primarily do is take traders from being boom bust traders or losing traders and help them become consistently winning traders. So anyways, my name is Simon. I love helping guys get better at trading, and I love trading. So it just has to be done in a structured manner so it's profitable. Hope everyone has a great night, and we'll talk to you tomorrow.